Hey everybody, this is Rob Keens with the Freedom Report, and this video is being recorded about 1:15 to 1:30 p.m. Central Time on January 30th, 2026. It's a Friday. Hope you guys are all doing well. Well, this video is going to be about the obvious by now. You've seen the markets this morning and the bloodbath that's going on in gold and silver. And we're just going to go straight to the charts and narrate you through what's likely happening. And at the end, I'm going to make some commentary about warnings I've been giving about something like this happening and how people need to be careful about who they listen to and the way that they look at markets. And I don't mean to lecture. I'm just trying to help people out so that you don't get frustrated, especially if you're new to this market. So we're going to take a look right here at goldprice.org. At the time of this recording, the gold bloodbath is really only 8.2%, and only. It's not normal, but it's not as bad as silver. Down $436.91 to 48.9074 US. Silver, however, is down $30.58 to 83.92 US, and that's down 26.7%. I posted something on Twitter this morning when silver was down about 14%, gold about 4.5%, that this was probably a healthy correction, and people said it's manipulation, and I agree. That's how these derivative markets work. This is all derivative traders. I'll show you. And yes, this is probably a wash, and it's probably something done by the insiders. We're going to go over to China, and you can see just about the same thing. Gold down 8.24 in the US, down 26.50. Back to China, gold down 8.18 and silver 26.46. Okay, now we've seen pricing differences in the Chinese and the US market. We've seen prices differences between the US, the Shanghai, and China, and the London OTC market. Why is it that China's price goes down and then rebounds a little bit? You can see a nice little rebound here. This is China. This is the US, goes down in the rebound on one-day charts. Why these charts look identical and the percentages are almost identical if these markets are truly different? This tells me that this is a coordinated price takedown. More than likely, it's a wash trade for several different reasons. Which I'll get into as we go and explaining how this works. And again, people that thought that COMEX was dead, people that thought the derivatives were dead, people thought that the big guys were losing control of the market. I've been warning that they are, but not yet completely. And this day proves that, because if somebody that really wanted higher gold and silver prices had been pushing this up and it was community oriented, whether it was China, Russia, and people in the US and whatever, the free market, whatever it is, it wasn't going to get slammed down this bad, because you can do a bazooka of future trading on the COMEX and do it, but you got to do it in the Shanghai. You got to do it everywhere, right? So how is this coordinated against different markets? And let's take a look. So here we've got the open interest, famous chart I've shown many times in the CME group for gold futures. Now this is only updated as of 9:40 a.m. this morning, and so we're not getting the latest data. That's a tad disappointing, because typically at about this time we would have gotten a little bit of an update on the price. But I've noticed since the government shutdowns last year, even with the government's reopening, that the availability of some of this futures data on gold and silver is a little bit slower to the chart than it is since then. And I don't believe the CME Group is a government entity. However, they do work with government entities or some back and forth. And so perhaps they're still getting that worked out. But we do have a quote as of this morning. The first thing I want you to notice is that as of yesterday, we had a volume of 652,473 contracts. Usually when you see a spike in volume this tall, if you look at this bar on the histogram chart, let me try to get the numbers off. There we go. This bar on the histogram chart over here on the right, 29th of January, and also on the 26th of January, people were obviously loading up. And usually that's a sign that a big short position is coming in the gold and silver markets because of the concentration of shorts you see on the COT report. So I wanted to go over here to settlements, and this data is if almost midnight last night. You can see that the prices were up, but there was a huge amount of volume. The dominant contract is in April. So we're not really getting what's going on today, but it looks like there was a setup for a crash that's been brewing here for some time. We'll go deeper into it. I think it's washing of futures and of options. You can see that the options expiration for both gold and silver, this is gold, and I'll show you silver in a minute. In fact, I'll just show you right now. This is silver. They're both January 27, 2026, silver options. Here's the gold options. January 7th, 27th, 2026. That would be exactly 3 days ago. This could be futures washing. This is something I've covered on the channel before, or futures target hitting, where you take a long, options target hitting. You take a long position on an options contract, which you can hold with a very small amount of money, but you have a ton of leverage. And let's say you go long, and maybe say you put that in a month to 2, 3, 4, 5 months in advance. Then the futures market is used to push the price towards that option. Then you get options, expiring, or even option people reselling their options to the market. And if you're on the plus side or in the money side, then you make money on it. So the options just expiring probably has something to do with it in both gold and silver. If you look over here at silver, volume was up yesterday, but not a ton. I think by the time we get volume data tomorrow, excuse me, we're going to see a ton of short settlement. So it didn't occur late last night. It occurred today on these markets. We won't get that data just yet. But as we look at the COT report next week, we're going to see which classes released a lot of those shorts and what was going on. You can see overall, one thing I did want to point out this is very interesting. If you look at the top line, as of yesterday, there was a net change of 13,613 contracts in gold. This is gold. And then silver, we had a net change of, settlements, go back to volume and OI, net change of 744. So there's a substantial amount in silver and gold dropping of contracts. And that means they no longer needed those futures positions. They weren't rolled into another month. The overall open interest came down a couple of days after options. So more than likely, there were somebody's in there washing the futures and the options on the COMEX, and they also happen to be doing it in China on that market and doing it however they do it across the world markets, and that's where you get that coordinated price decrease. Now, coordinated price decreases like this may look like they're legitimate, but they're actually not. You cannot tell me if the Shanghai's been rising in influence and the price differential has been so much higher than the US for so long. I've been covering this for 3.5, 4 years. The last 6 months to a year, other people have been covering Shanghai a lot as those premium differences or spot price differences have widened between China and the US and London. You would think that China wouldn't be affected. It's a different market, it's different players. But is it really? When you see coordinated between multiple markets happen like this to me is profit taking. This to me is somebody pushing up the market, ginning up the base, ginning up the banks, ginning up social media, getting the price to a point in which they want, and then dropping it and taking profit. If this is where people that you have to understand. A lot of people thought that when you were going to get to $50 silver, that some bullion bank was going to bust, and it didn't happen. And then when it got to $100 silver, some bullion bank was going to bust, and it didn't. But that's because they take multiple long and short positions, not only for their house account for the banks, but for their clients. And you can you can stair step your trades both into futures and options, and you can wash people out, or you can pull the price back, or you can close positions and still make money in the long run and not get bankrupted, because none of these guys is dumb enough to only have a single position in the market and lose their butt. They all stair step in and they go long and short. And so if you take a hit on the short side, you made money on the long. If you take a hit on the long side, you made money in the short. If you take a hit in futures, maybe you made money in the options. But if you can use futures to paint a chart the way you want and make money in the options, and then bring that price back down and make money on your shorts on the market, then you can survive overall. You're not closing out your entire position. So it's a matter of how you manage that money, managing it in multiple trades. And as you stair step your positions in, and the big market makers are known to do this. And I personally think as you look at the AI guy, Asian guy, and you look at social media and these new sort of accounts coming in and just pumping silver and gold, and all of a sudden you have this crash. You have to wonder who's behind those accounts. I put my face on camera, I put my name out there, I brand it as me, and this is my analysis. And there's nobody, I can't hide behind anybody. You guys are seeing my face. What about those other guys that are pumping the market? And this is a lesson to be learned. When you see guys pumping the market, be very careful. And I'll get more into that in a moment. That don't have a face and a name, and don't have some sort of resume or something they put out there so that you know who they are. And that's a lesson for all the new people coming in the gold and silver market. By the way, this happens in a lot of markets. You see it happen in stocks and bonds, and maybe a little bit less so daily in bonds, but long term, you see it happen in bonds. You see it happen in stocks all the time. Forex, it happens probably 700 times a day. I mean, that's a crazy squirrely market, and how much leverage is there. I traded it years ago. My goodness, I don't know how I survived. But anyway, so you can see gold. I just got gold US dollars an ounce graphed out here, and you can see that the crash started from 55.63.46. It says 4 days ago, but actually that's not correct. Well, there was a pullback, and then you had it's about 53.97 that was on the 29th, and on the 30th in the morning is when it fell. That's right there. You see that 5 a.m. So as soon as those markets open, boom, massive amount of not only new short paper, but liquidation. If you look at the change in overall net interest of gold positions, just letting them expire and say, well, they must have lost money. Well, it depends on where they got in, and it depends on their overall financial position, and it depends if they're only playing futures or shorts, and it depends on if they're playing in London and the US and China and everywhere. And you start to think about it like that. And if you're coordinating positions across different markets, different products, and stair stepping in and out, how you can hold long term, long or short positions and not be wiped out when the price moves one way or the other, because you're looking at your net value. In other words, think about it if you're a stacker this way. If you're a stacker, we'll look at silver now and look at what happened. Basically, the same thing. This one actually started last night, very late last night, and then at 3 this morning, and then at 11 this morning. So you've seen it like stair step down. By the way, when you see that much selling, that is coordinated. The whole market's not going to stair step down at the same price. When do you ever see it? Look at the past time on this chart dating back to November. Do you ever see that? That's a coordinated move. Somebody's doing it. Don't know who. We can speculate. But when you if you're a stacker, look at it this way. Stackers talk about dollar cost averaging. Okay. You talk about, well, I'm going to get in at silver at 21, and then I'm going to get in again at 25. Then I'm going to get in again at 45, and then I'm going to get in again at 75. I'm going to average my position to the current price, and that's how much I made. That's the exact way that it happens in the futures and in the options, except for they can do it leveraged. They don't have to pay the full price, and they have bukus of money behind them because they either have clients or sovereigns or big banks or whatever the case may be. So one of the things that I want to point out here is, first of all, I've been talking about a healthy correction, and people will say, Rob, it's not a correction, it's manipulation. Yes, I agree. But the manipulation in the market, or the price moving in the market, is so obvious when you have a day like this. I mean, it's obvious when you see gold and silver go straight up. No market ever goes straight up forever or straight down forever. They just don't. You've got millions of participants. Any healthy market's going to move around, and it's going to have general trends, and it's going to go up and down according to fundamental and technical things that are going to affect it. Okay. So the thing is, when I get on social media and I tell people we're not going to go up forever, and I expect a really healthy correction, and it could happen this year, even soon, or it could be until the stock market crash, but I expect it to happen several times, and then we have the last big boom. It's because I've experienced watching not only gold and silver market, but the Forex market, the stock market, the bond market, lots of different markets, Bitcoin market and crypto. I've done that for the last several years, just analyzing it using a bunch of tools and outflows and inflows and who's doing what across those markets. And you understand the nature of markets for millions of decision makers is not going to be in a straight line. And when you have much power over the pricing of things like commodities in a spot price market in a couple of three locations around the world, that allows a concentration of power. And if you guys have ever watched me show the Office of the Comptroller of the Currency report, in which you have four banks that massively controlling derivatives, not only gold, silver, but other derivatives, then you begin to see four and eight banks. Then you begin to, and they're named in the report, that have most of the derivative position in all markets, whether it be Forex or whatever. You understand that the banks and their clients, because it's not just the banks, but whoever their clients are for their client accounts, are wanting these things to happen, and they happen at a concentrated level. Okay. There are powers that be that have lots of power in markets. And it's not just gold, silver. It happens across the board. And if you spend enough time in markets over the years, like I have, you start to figure out that this isn't so uncommon, that there are market making in the market using derivatives that have the tremendous leverage, especially to something like a commodity that's physical many times over, that can be used to move that price up and down. And when you understand you can stair step in and out, much like dollar cost averaging for the traditional consumer, and that you can control it with small amount of money on a leveraged position, and you can work in multiple markets in multiple directions at the same time. There's nobody saying that you can't take a long on a stock and a short on a stock. You can do that in your own account if you want. I mean, you can have separate accounts. That's what a lot of the traders do on the commodities markets and the stock markets and things like that. So that one move in price may not wipe you out. In fact, what you're wanting to do is net your positions. If you're wanting to make money, you want to net how much money you made on the long and the short side, and you'll take some losses, but it's the net is what matters. So think about your own portfolio. Maybe you own some stocks in the auto, some stocks in the tech sector, some gold and silver, some bonds. Maybe you own some rental properties, some real managed, rental properties you have physically. Maybe you have some ETFs in your 401k or pension or whatever the case may be that are more broad market or emerging market, these big sort of mutual fund or ETF type funds. So at that point, I mean, we all do that, don't we? If we're saving anything, we usually don't just save in one thing or another. You leverage your risk in different markets. Big market makers can do this too, and they have more leverage and more market data than you. So the lesson learned for the new guys coming to the space, and maybe a cautionary reminder for those that have been in this space for a long time and didn't see it coming, is that these things happen. This is a pullback. I've been warning about it. People were excoriating me. I got called the N word. I got called, and I'm a white guy, right? I got called all sorts of things on social media, but I've been warning. I've seen this too many times. Now, who's doing it? It's got to be a big money player or a group of big money players are doing it for a reason. Is silver ever going to recover to $121 an ounce? Is gold ever going to recover to $5,500 an ounce? I think so. It may take some time. This is such a big slam, a big single day move, bigger even than I anticipated this quickly, but doesn't surprise me given the length of the moves the last 2 years, that it may take some time. Because if you look at the type of move this is months worth of move in gold and silver, months worth in a single day, or pretty close to months worth, plural. So if we go back and look at the chart. So, when you have the big moves one direction, you tend to have the big corrections the other direction. And it can either be a healthy market correction or it could just be a derivative based, closing out positions transaction by big players. And I suspect that one or more big players are in the markets using futures and options across different markets to move the price around to certain price points. And they're making the market the patsy. And what was new this time was that I think they took AI and social media and used it against, because what is social media? It's the anti what? Mainstream media. So what do the big market makers do? Well, if we really want to wash people out, let's pump that price for a number of months and let's hit it hard using what? Social media. Okay, so now people on social media are confused. Who do I listen to? Do I listen to this account or this account or this account or this account? It also simultaneously creates confusion among what used to be a grassroots communication medium that now the big players are obviously playing in. And so now you have to be aware of how the markets work. You have to understand that, and you have to be aware of who's telling you what and why they're telling it to you. I don't do this video to say I told you so or to say I was right. I do the video after the fact to show you that when somebody like me, who's a human, who you can see and touch, and who you know who it is, and throws himself out there and isn't, part of a big market making company and has no, financial incentive to support that, comes out and tells you that there's probably going to be a correction sooner than later. And then you get mad because 25 guys on social media, you don't know who they are. They're computers or anonymous accounts with interesting sounding names that sound like they're on your side. That's all done on purpose, probably. Hypes up the market to a frenzy we haven't seen, and we haven't even gotten to the recession or the depression yet, which is typically what pops metals. Then you look at that and go, maybe, just maybe, there's something else behind this. And this is a lesson for all of us to learn. So I hope you guys didn't get washed out too bad, but if you're stackers or you're in any sort of derivative ETF or whatever on gold, silver, however you're investing, just, know that sometimes this stuff happens. It's not normal per se, but just be aware that this can happen and be aware of where you get your information from and how much hype is being generated. I don't think this is the end of the gold and silver market. Some people are going to come out and say this is the end of gold and silver. It's never going back up. I don't think so. I think it's going to take a fair amount of time to recover. I think that it will get there because the fundamentals haven't changed. But just be aware for people that thought the COMEX and LBMA were broken and China was taking over the market. China's price is moving the same as the US price. And the big guys with the big cannon that I've been warning about for the last month still have that cannon to shoot off and wash people out of the trade that are the smaller players, and this happens in every market. Just be aware that that happens, but it shouldn't necessarily change your long-term view on the precious metals. This is going to wrap it up today. Ladies and gentlemen, this is Rob Keens with the Freedom Report. Have a blessed weekend. We'll be back next week for more on gold, silver, and the economy. And if you haven't had a chance, check out 2 days ago my Wednesday video on the market where we look more long-term on what's going on in the economy and why that's bullish for precious metals when looked at in the long term, and stop worrying so much about what happens on a daily basis and stop allowing some anonymous social media account or voice to tell you how to trade a market, and then be surprised when somebody comes in and washes out those positions on the market and takes you out in terms of what you originally invested. It's an unfortunate fact that that happens, and it has happened here. But now, lesson learned, let's be smarter about how we pile into these markets and who we listen to going forward. God bless everyone. Talk to you next week. Rob Keents with the Freedom Report.